Hello everyone, welcome to tonight's stream. I hope you're all doing well. It's been a minute. I've been very busy and rather stressed. Um, had my car stolen again, had my bike stolen. Oh, and I've just been working on fulfilling the Kickstarter. Still, just shipping out 1,800 bubble mailers to go, not including the ones I've already shipped. It's closer to 2,500. Oh, but I'm very busy, very tired. It's good though. I'm glad I'm doing it. Okay, Bitcoin's actually performing pretty well recently. Let's talk about why. On the daily chart, you wouldn't really get the impression of strength, but only in terms of volatility theory. If we turn off your indicators, we look at this and we say, hey, that looks great. It's going up. That's very good. But we need to concern ourselves with the bigger picture. And to do that, we're going to go to a lower time frame. Right? So essentially, we've had this very strong downward push, and that in turn sees compression. And 3-wave PM here is very beautiful, right? Where we're looking at our longest overextended period here, right? And we wait for that to taper off, which happened here. And we say trend cannot occur. Well, this is still orange. So as soon as that ends, right, trend can begin again. And what does that look like? An expansion. And we had this nice little impulse here. But if we zoom in on this on a lower time frame, we will notice it immediately begins to mean revert after its expansion. Right. So here we could have bought this bullish impulse, but then it very quickly breaks this pivot where you would stop out and it mean reverts. So compression continues. And we trade laterally inside our CLCP for quite some time. Right, very clean. Until, what do we get? Our next expansion. So, we say, as long as we're above this pivot, we're in trend. We break inside here, which begins our mean reversion. Right? This is a pretty good example of why you wait for your entry. Right, because mean reversion activates here with the target of this mean. But if you entered on the actual entry of the mean reversion condition, you would very clearly stop out. So what I recommend is waiting for your two entries, or there's three entries. One, your CCI roll down of the, in this case, 40 period, a tag of the CLCP, or a tag of the 3.2 CLCP. And then we do actually get our mean reversion after those two entries. All right, it's very reliable. The issue is getting a clean entry. It can be difficult. So that mean reversion does occur. And now we have this odd expansion. It's actually generating Condor's expansion, which is stressing the depth of the pivot. I'll explain what that means here. Because we have this initial bearish expansion, which immediately switches to mean reversion, we actually end up re-expanding those overexpanded periods on the bullish move. So that is not good for the strength of trend, because you are defining the depth of volatility, right? The amount volatility has to expand. You're referencing it off of volatility. You're referencing it off of Ooh, what's the right way to describe it? All right, we have a 100-period look back on this indicator, right? That's how it defines volatility. We look back 100 candles and we take that data set and we define a normalized range for what volatility should look like. And that takes the form of our 3-wave PM. So if we have bearish volatility in that data set to define bullish volatility, the converse expansions end up putting a limit on just how much this can expand. So if you're including highly volatile data in a data set, and then you have even more volatile data added to the data set, but in the opposite direction, this puts a hamper on the outer bounds of that distribution. So this expansion here is truncated based on this data here. So that means this is not expanding as high as it would if we didn't have this bearish expansion, right? And if this was a higher expansion, this pivot would be lower than it is currently. So you're adding exhaustion into the scenario when you're on a bullish move. And you can see why that gives me apprehension. But that doesn't change the way we're able to play it. Because we have this very reliable pivot, as long as we're above it, we can stay in a bullish position, right? So if we tag down off this pivot, which we are defining as the 110 period 1.25 standard deviation of a Bollinger Band, this is going to keep on going up indefinitely, right? As long as we're above this pivot, good, bullish, go. But if we look at our higher time frame, you'll notice we're at the top edge of our CLCP and we're actually showing some resistance. So with the combined reduced range of the distribution on the lower time frame and the top of the CLCP providing resistance, I don't think this is as strong a chart as a lot of people would like to imply. But what's very nice about the strategy is just because we don't have perceived strength, we do have reliable pivots. So take your positions as a long. Just be very, very quick to stop out as soon as this begins to mean invert and look to switch your position to a short when that does occur. Right, so stay long. When this breaks, wait for the tag of the CLCP or the 3.2 of the CLCP and short it to this moving average. Until then, we stay along on the pivot. So, very simple chart. That's kind of silly. Very simple way to play the chart. The chart itself is somewhat complex. So, let's talk about your questions. XPD USD. Let me just pop out the chat. It's like that double pendulum thing. Think about it more like having a bunch of loose rocks in a volleyball, right? Let's say the volleyball is falling, right? And you bump it, you hit it back into the air with your fist, right? You apply counter pressure. The rocks, even though the volleyball initially starts to go back up, you'll have the extra weight from the rocks that hamper its upward momentum because their momentum is in the opposite direction. Which could also be implied that Bitcoin has the strength or the force to push past that extra resistance, given its continuation above the longest overexpanded period. There's one more thing I want to talk about on Bitcoin. And it's the mean reversion condition to the upside, because that is a non-negligible piece of information. This question is, can we define it? That's rough. Okay. Cool. I think we can define it at this here, 25. Wow, doesn't that make a lot of sense? Look at that. Clear ejection off of the longest overexpanded period. Clear ejection off the longest overexpanded period. When we break outside, we rapidly accelerate towards the mean. So I think that adds an extra layer to the resistance scenario. We hit that target along with the CLCP, in addition to the converse expansion on the lower time frame. I wouldn't be surprised if we bounced off 30,000. It'd be interesting. Don't think I'm seeing what I like on this chart. This is a very tapered downtrend, which makes it hard to play, right? Because if this is a 100-period look back to define volatility, and the entirety of the trend is in a range, right? We're defining that as normal. And because we're defining it as a normal, the readings neutralize. So even though this is a consistent move, it's so consistent that we define it as normal. And if we have something normal, then we can't define its outliers. And if there's no outliers, then there's no play. Yeah, I don't want to play anything on this chart. Next up, I think I told you to write me an essay. Yeah, lots of bank issues recently. Oh. Look, my plant is flowering. I'm so proud. Yeah. take a look. Do I need to pay for this now? I don't know. Okay. Cool. So, daily chart. Waiting for ACAT, 3-week PM to load. Interesting. This is very compressed. It's kind of surprising. Yeah, look at that. That's very green. That's a lot of potential energy here on the daily chart. And while this is not a clean mean reversion in the least, oh, there is one thing I want to point out here. One super reliable play is 3.2 of the CLCP. Always take these. Like, they're just so reliable as short scalps. Like, when you tag the 3.2 of the longest over expanded period, you, like 99% of the time, you get a bounce off of it. It's usually not very extensive, but just a 2-to-1 profit ratio. All right, because that's a true outlier. Right, it's defining outliers based on the relative volatility of the current situation. So, very compressed here. Let's see if we can imply direction on the lower time frame. Not really, because we have this expansion. It doesn't go anywhere. This is incredibly compressed. We would be looking for just a new generation in either direction. Mass. So hold on to your hats. I think we're going to get a big move here soon. And who knows, maybe we'll finally buy in. It's interesting. Get your final questions in. SCCO, I don't know what that is. Is that correct? I see why you like this chart. This is correct. I just look at this chart and know I like it. That's incredibly clean. Wow. Wow. Nice chart. That is insanely clean. All right, we enter here. Tag for short. Tag for short. Mean inversion. Very nice. When did you ask this? March 8th. God damn. So right here? Dude, you are a legend. I hope you took this. That's really nice. Yeah, you don't need my help on this one. Your play is complete. Tell me you took that position. Oy. Fingers are popped. Okay. I think that's going to be it for tonight. Yep, it's been a pleasure. I will talk to you all hopefully next week. Have a good one.